Good evening. Tonight we'll be presenting our feasibility study on the expansion of Sunrise into Brazil. We'll be focusing on the benefits of the Brazilian economy, strategies to mitigate some of the challenges for entering this market, an action plan for next steps, and finally, we'll open for questions for any queries that remain. Over the next 15 minutes, we'll explore how through our analysis we've come to our recommendations. But in summary, we believe that Sunrise should choose Brazil as its next market to expand to. Our analysis will show that whilst entering Brazil comes with a number of complications, we believe that the size of the market, the current economic conditions, and forecast provide a valuable opportunity that far outweigh the costs of overcoming the difficulties and risks associated with it. Given some of the complications we will explore, our recommendation is to enter cautiously through a strategic partnership that could provide a sustainable path to growth. Sunrise is one of the world's largest food companies, a leading rice brand in Australia and the Pacific with a long history in cultivation, milling, processing, manufacturing and marketing of rice and related products. Its socially responsible approach to doing business and its focus on continuous research and development have positioned Sunrise as a leader in the industry, benefiting from significant research and development which have yielded several competitive advantages, including sustainable irrigation techniques, best practice technologies for harvesting and processing, and minimizing the use of water and overall harm to the environment. This has allowed the company to maintain relatively stable revenues in its 30 brands, albeit with some variability to profit margin, primarily related to the effect of environmental conditions on each year's crop. The Sunrise Group is a listed company on the ASX, comprising multiple business units, assets and operations across Australia, New Zealand, the Middle East, the United States, the Pacific Islands and throughout Asia. Its vision is to become the world's favourite rice food company through innovation, operational excellence and nutritional value. With simplicity and effectiveness of processes being at the forefront of the business strategy, Sunrise aims to satisfy customers all over the world through unbeatable products and services. Brazil is a market with huge economic potential for Sunrise. As the 9th largest economy in the world and Australia's largest trading partner in Latin America, it has a large population of 210 million people. It is rich in natural resources, including a fifth of the world's fresh water supply, and a per capita rice consumption that is 3 times that of Australians. Brazil is a market that Sunrise cannot afford to ignore. Over the past century, Brazil has moved from a primarily agrarian economy to a diversified one with strong manufacturing and service sectors, and a significant investment into physical and human capital. Described as a self-sufficient nation, Brazil has historically fed and funded its nation through internal resources, suggesting that domestic production is favourable to exporting Australian rice into this market. Often struggling with political scandals, corruption, bureaucracy, poverty, inequality, environmental degradation, and a complex legal and tax system, a deep understanding of the local business landscape would be critical to a successful operation in Brazil. From Sunrise's perspective, this highlights the benefits, if not the need, of partnering with an established Brazilian firm as a logical strategy for entry. Rice production in Brazil accounts for close to 3% of the country's total agricultural produce, with its high-yielding rice fields accounting for almost 70% of all rice-growing areas in South America. Generally concentrated in 2 regions, approximately 40,000 farmers produce the staple food product for Brazil within a profitable yet very competitive industry. Focused on domestic consumption, with more than 80% of annual yields consumed by Brazilians, industry revenues are expected to reach $1.7 billion by 2025. This is compared to Australian domestic market, which sits between 200 and 250 USD per annum. Such a large and attractive industry does come with a number of issues. The industry is increasingly threatened by a fragmented domestic market, lower production costs in neighbouring countries, and of course the effects of COVID-19. Despite these complications and the comparatively lower retail price of rice against Australian shelves, the Brazilian rice market continues to be very profitable, with firms generating margins of up to 10% compared to Sunrise currently operating at 2%. In addition to the market size, the Brazilian agricultural industry maintains strong links with local research institutes, and the government provides additional incentives for improvements through a number of recent green economic programs. As such, the Brazilian rice market currently represents a very friendly environment for a growth-minded, technologically focused, responsible firm such as Sunrise. Next, we'll explore our core economic analysis. We have selected 5 key metrics we consider appropriate for the assessment of Brazil's short and long-term economic health. These include the country's real GDP and the detailed growth accounting parameters, the real exchange rate between the Brazilian real and the Australian dollar, the default risk and risk of sudden currency devaluation against the expected exchange rate trends, key ratios of the country's banking system, as well as an analysis of the inflationary trends and the key drivers of inflation. For our analysis, we've used data from multiple sources, dating back approximately 10 years and longer where available. This has helped us analyse the country's past performance to make inferences about the future. Overall, Brazil's economy has followed a positive trend, with short contractionary periods primarily attributed to political crises. Expansionary periods are generally associated with fiscal and monetary reform, primarily aimed at reducing poverty and inequality. The positive trends observed in 2017 have been somewhat stalled by the COVID-19 pandemic. However, there are signs of recovery since February 2021. Our analysis shows a high positive correlation between GDP growth and multi-factor productivity, as demonstrated by the graph on the right, compared to other factors such as physical capital and labour utilisation. This is most likely attributed to the continuous investment in education, research and social welfare, areas that have attracted the highest proportion of government spending since the 1990s. Over the long term, we believe that the positive yet gradual influence of reforms aimed to better align education with industry, simplify the tax system, and support a more sustainable agricultural practices address some of the historic macro inefficiencies, essentially strengthening multi-factor productivity and promoting sustainable growth of the economy into the future. We believe that this will create a favourable environment for Sunrise, with their focus on growth through innovation and development. Historically, Brazil has emerged from periods of political and economic instability with decade-long periods of growth. Having emerged from the most recent crisis in 2016, the economy is showing all of the previous positive signs demonstrated for recovery. Whilst all the indicators are positive, we recommend a cautious approach given the early stages of recovery as well as the additional disruption of COVID during 2020. As such, we believe this strengthens our recommendation to partner with a local firm, reducing the initial commitment of establishing the entire infrastructure required to begin operating in Brazil independently.
Considering the low profit margins and the commodity nature of rice as a product, maintaining low marginal costs would be essential for a successful expansion strategy. Our analysis of the data on the exchange rate between the Australian dollar and the Brazilian real for the past 10 years indicates that the production costs for the same basket of goods were 82% more expensive in Australia than Brazil. This supports our recommendation to emphasise local production, allowing for better cost controls, consequently leading to affordable recommended retail prices and higher prospects of survival in a highly competitive environment. Regarding the repatriation of profits, considering the free-floating nature of both the dollar and the real, and the lack of a free trade agreement between the two countries, we would recommend a level of currency hedging which would help manage any excess exchange rate volatility and downside exposure. Brazil's current BB negative credit rating allows us to infer an almost negligible probability of default over the next 12 months, and approximately a 98% probability of repayment. Combining this with the one-year government bond yields for the two countries as of the 29th of August 2021 allows us to calculate the expected devaluation of the real against the dollar at approximately 6% over the following 12 months. We have observed a level of volatility in Brazil's sovereign debt CDS premiums over the past 10 years, likely attributed to the increase in fiscal deficits and debt to GDP ratio. However, as only 3% of the country's total debt is in foreign currency, and over 90% of that is owed to Brazilian citizens, the exposure to foreign investor sentiments is limited. We therefore believe any potential debt crisis would likely evolve as an inflationary problem rather than an external debt default. Mitigating rising inflation by increasing interest rates would affect the nominal exchange rate, as suggested by the uncovered interest parity theory. However, inflation for the next 12 months is currently forecast to be in the same range as expected devaluation, thus limiting any material real value risk to the proposed investment. Nevertheless, moderate currency hedging, as described earlier, would be advisable. Our recommendation is further supported by our analysis of the risk of sudden currency devaluation in the event that high inflation is combined with political instability and weak output growth, which has happened in the past. This may result in foreign investors selling real denominated assets, resulting in rapid depreciation of the currency and in extreme cases a sudden stop to the economy. Since 2007, Brazil's central bank follows a policy of no intervention to the exchange rate, which could explain the weaker correlation between the exchange rate and Brazil's CPI index compared to the first 10 years when the real was introduced as the country's new currency. However, Brazil's central bank holds significant foreign reserves, albeit they reduced during the COVID-19 pandemic, but are now increasing again and could be used to stabilise the currency in the event of extreme volatility. Discussion of the central bank's role in the economy brings us to our banking system analysis. Perhaps surprisingly, considering the country's political and social problems, Brazil's banking sector has come a long way in terms of stability and health over the past decade. The system shows signs of maturity, especially compared to other South American countries. The central bank was given significant independence by the country's new constitution and full independence since February 2021, with its fundamental purpose being price stability. Although the effects of the COVID-19 pandemic are still uncertain, the momentum towards regulatory improvements has not abated. The banks have returned to pre-pandemic solvency levels, deposits have increased, and confidence in the country's financial stability is strong. This is supported by our analysis of key monetary ratios. The stable and relatively low currency drain ratio indicates a high level of trust in the banking system, very similar to Australia's, even during periods of uncertainty such as the global financial crisis. The sharp changes to the reserve ratio are primarily attributed to 5 factors. The tiered approach to the minimum reserve requirements based on the significance of the financial institution as a percentage of GDP. Attempt by the central bank to keep inflation within its target range. The strong growth and incentives for investment financing in the early 2000s. A generally defensive stance adopted against short-term contractionary periods around 2010. And the temporary reduction of the minimum reserve requirements during the COVID-19 pandemic. The moderately positive trend to the money multiplier's growth explains the gradual increase of the money supply. This is useful in understanding the key drivers of inflation, which in Brazil have been historically high and volatile. Using the quantity equation, we performed a more detailed analysis for the last 6 years. The results indicated a relatively stable velocity and low velocity growth rate. This suggested, firstly, a relatively stable currency circulation profile, as expected based on the currency drain ratio analysis, providing a level of confidence against potential bank runs, despite the relatively low reserve ratio. And secondly, that inflation is primarily driven by the money multiplier and changes to the GDP growth rate. With a high expected inflation value, it is likely that the central bank will have to increase the base rate significantly in the short term, and therefore, according to the Phillips curve and Ocon's law, decrease output and increase unemployment, therefore resulting in a potentially less favourable environment for new investment, a key point to remain cognizant of. We would now like to spend the last couple of minutes of our presentation summarising our recommendations and suggestions for next steps. Based on our analysis, Brazil represents a valuable long-term opportunity for Sunrise as it considers expanding operations into foreign markets. As the world's 9th largest economy, 6th most populous, and highest rice-consuming nation outside of Asia, the Brazilian market carries significant long-term potential to justify the cost of expansion. Despite deterring factors such as corruption, bureaucracy, and exchange rate volatility, on balance, the opportunities presented by the size of the local market, high yields, low costs, demand for innovation, financial sector stability, export opportunities, and ongoing legal, social, and political reforms towards a more open and efficient economy are substantial. The risks, although considerable, we believe are manageable. A pragmatic approach will be to follow a staged entry into the market, pursuing partnerships with local companies as a first step. This will reduce Sunrise's exposure to the complex tax and legal systems and shield it from extreme competition as it gains experience in the field while capitalising on its competitive advantages in the longer term. Amongst the major companies present in Brazil's rice market, Sunrise could look at Adicagro as a potential partner, a leading agricultural company with a 17-year presence in Brazil and similar values to Sunrise. A partnership will allow the group to grow sustainably sourced rice to a quality and specification tailored to the local markets, and in time to grow IP-protected varieties specifically for Sunrise. This will further enhance Sunrise's global position and its ability to flex numerous supply sources and support exporting operations in response to global market dynamics. Sunrise is well positioned to pursue this opportunity with its current expansion plan backed by a substantial financing facility dedicated to geographic growth and market diversification. This will be valuable in the short term as we expect to see Brazil's central bank raising the base interest rate to bring inflation back into target, increasing the local costs of financing. In conclusion, based on our analysis of Brazil's economy and expected operating environment, we recommend that Sunrise follows a cautious yet progressive expansion strategy. Moving forward, we would like to suggest 2 key actions to complement this initial macroeconomic analysis. Detailed customer competition and product research, aiming to identify an optimal value proposition for market entry, and an exploratory discussion with potential partners. These steps will support the preparation of a detailed business case for further consideration and ultimately bring Sunrise closer to realising its vision, becoming the world's favourite rice food company. We hope this presentation has helped build some sound foundational knowledge regarding Sunrise's potential expansion into Brazil. Thank you for your time and attention, and we invite you to ask any questions you may have.